Now we come to our, very popular segment of our show, top three things for individual investors to consider before you make your investment decisions. And interesting top three this show, because this is one of those shows that I think one topic is going to dominate quite a bit the other two, and that is our first point, which is the jobs data this Friday. It could definitely be a market mover, and we're going to get jobs data out of Canada and the U.S. market mover. It's going to give us some insight into perhaps what the central banks, both in Canada and the U.S., will do at their next meeting in mid-September. So we're going to go over that. Corporate earnings update. For many of you saying, well, I thought corporate earnings season was pretty much done. And it has been done for a little bit now, although last week we did get some very important corporate earnings out of Canadian banks. We received some very important earnings from Nvidia, largest company in the world, and the largest chip maker, AI. We heard from Marvell, another chip maker, Dell, also in the AI server area. Well, this week, and actually tonight, as soon as tonight, we're going to get earnings from Salesforce and Broadcom, two big tech names, and I think they also have the ability to move markets. International trade headlines focusing on India, U.S., and China. Yes, trade is still a topic that can move markets. Uncertainty can move markets. So international trade, you couple that with some of the uncertainty out of the Fed, what's going on there with the firing of a Fed official for perhaps mortgage fraud, and a lot of uncertainty going on right now. And right now, the geopolitical situation or environment is causing certain things to happen, such as a rise in bond rates. So we'll get into all that as well. So let's turn to our first, and as I said, most important topic for our show today, which is the jobs data coming out this Friday. And it's going to be so important. In the U.S. right now, we're hearing a change of heart. Perhaps the Fed is more leaning towards a Fed cut in interest rates come September 17th. For the longest time, they've been focusing on inflation, and we are seeing inflation rising. But, and this is a big but, they seem to be focusing on a decrease in jobs growth. Keep in mind, the Fed, as well as the Bank of Canada, has that dual mandate, price stability, which is your inflation, and job growth. And I think the last jobs report, and more importantly, the revisions to U.S. jobs from the previous 2 months, really spooked the Federal Reserve and spooked investors. And we are definitely seeing a slowdown in jobs over the last few months. And we'll see what the revisions are for the month of July. We're going to get August jobs data out of Canada and the U.S., but we're also going to get some revisions for the month of July. I'm sure of it. We always seem to get or receive revisions. So let's go to our first chart that we have here, which is the monthly jobs change in the U.S. And you can see here, revisions shaved off, as I mentioned on previous shows, almost 260,000 jobs in the months of May and June. You can see how low or how very little growth that we saw, 19,000 and 14,000 in those 2 months, May and June. July came in at 73,000. The expectation for jobs in the U.S. is about 75,000 for the month of August. If we get anything lower than that, if we get job revisions for the month of July that are negative, then perhaps that will cement an interest rate cut come September 17th. Right now, it's about 80, it's running at around 80% as the likelihood for a interest rate cut in the United States come September 17th. Next chart here, we have U.S. unemployment rate, and you can see here it's been sort of flatlining in and around between 4 and 4.5% for a little while now, but definitely higher than where it was back in 2023. You can see it was below 3.5%. So in the last year and a half or so, it has gone from about 3.5% to just over 4%. Many people would say still full employment in the U.S., although some of the Fed officials are starting to say, well, yes, but we are seeing a slowdown. And that has kind of stirred the pot a little bit. The President of the United States wanting interest rate cuts, some of the Fed members themselves wanting interest rate cuts, and we've seen a bit of a divided Fed right now. Our next illustration or chart, this is actually 3 charts that we have showing 3 things. We're showing job openings, hires, and quits. We actually received the number just this morning on job openings in the U.S. We call it JOLTS, job openings and labor turnover. So these are people that are able to go find other jobs. And job openings, obviously, the more job openings, the more people are able to find other jobs, perhaps paying higher wages. But you can clearly see here from these 3 charts, job openings rate coming down as a percentage. So not as many jobs available to the general public. Hires, or the hire rate as a percentage, coming down in the U.S. as well. So companies not hiring as much, not as many job openings, and of course, less people quitting their jobs to find other jobs right now, perhaps at a higher wage. So with all that in mind, definitely can see how this is affecting the economy. This is supposed to bring down inflation, but unfortunately, inflation has been ticking higher in the U.S. and not so much in Canada. Canada's inflation rate 1.7%. So we're actually below target of 1.7%, which is why I believe in Canada we should be cutting interest rates. Regardless of what the jobs data says this Friday in Canada, I'd be cutting rates. And one step further, as I mentioned to Ian Lee, as Premier Ford has said many times recently, cutting taxes. We need to do what we need to do to stimulate this economy here in our country. Our next chart shows Canadian employment change, or the bar chart here. And you can see that in the months of July, that we actually lost 41,000 jobs in the Canadian employment change. There it is. We lost 41,000 jobs last month. First time we've seen a negative number since March, when we lost 33,000. You saw a big spike up, 83,000. I think that was more to do with, in June, part-time employment. I think that also has a lot to do with those that are self-employed. A lot of those jobs created were self-employed. Those that, they quit their job at a big company and they call themselves self-employed. They do certain things for businesses kind of on the side, and that is what many people do. They look at this as an opportunity. Once they quit their I guess the job that they've had for many years, they become consultants and consult at a consultancy rate, and that's what we're seeing a lot of these jobs created. Canada's unemployment rate stays flat, 6.9% in July, our next chart. And you can see here how the chart has fared. Really, the last 3 out of 4 months, we've seen it at 6.9%. We had a bit of a blip to 7%. But you can go all the way back, I guess, to, end of last year. Once again, we saw a 6.9% unemployment rate drop down towards the beginning of this year, 6.5, 6.7, and then has gone back up higher than that. Again, 7% unemployment rate. You compare that to 4.2% in the U.S., obviously much higher. Where are all the jobs? Where is the highest unemployment rate in our country? Our next chart will show that the breakdown by province. You can see here in Ontario, we're almost, we are 1% above the average in the country, 6.9. We are at 7.9 here in Ontario. Alberta, 7.8. Those Newfoundland, obviously being an island, it's a little bit different. Obviously, in the maritime provinces, unemployment's a little bit higher. Lowest rates, I guess, Saskatchewan, 5%. Quebec, 5.5%. BC, 5.9%. I know in Quebec, they get a number of subsidies from the provincial government. So this Friday, we're going to get some crucial numbers. I believe that if the jobs data comes in strong, maybe we're going to see that affect the markets in the U.S. We see the U.S. jobs data very strong, then that may mean that the Fed will be on hold for a little while longer, because inflation's moving higher, because we're seeing the consumer still spending in the U.S., and that may delay the Fed cutting rates. However, if we get a weak number on jobs Friday, I think the Fed will be basically a shoo-in to cut rates. As I said, I think in Canada we should be cutting rates regardless of what the data tells us on Friday. Second point I wanted to get to that I think is important for individual investors, as I mentioned, is corporate earnings. And right off the top, I said that we received some big earnings reports last week. Nvidia, I thought, was a fantastic earnings report, not factoring in China. They still beat on the top and bottom line. I know that data center and was not as impressive as the whisper number, as we say, could have been. 54 billion versus a whisper number of 55 billion. But overall, not including China, their numbers were extremely strong. If the U.S. allows Nvidia to sell to China, imagine what their numbers will be next quarter or quarters to come. Canadian banks also reported fantastic earnings, and their stocks, for the most part, went higher, with the exception of TD, which had a bit of a soft earnings report. Well, tonight we're going to get Salesforce, and we can pull up their chart here. Salesforce is in the software area. We know software has been taking it on the chin because the talk has been that AI will replace a lot of the software and software companies. And I just don't think that's true. A lot of these companies are using AI, names like, Salesforce and Adobe and many others are using AI. I just don't think they're going to replace these companies. And Salesforce, for those that aren't familiar, they are your contact management system. They are your funnel. Businesses use it to keep track of sales data and keep track of your sales force, really, which is where the name comes from. And you can see here, Salesforce trading at, in my opinion, a significant discount to many of other big cap tech names. And let's not forget, Salesforce, a Dow component. The next corporate earnings I want to focus on, and investors should be focusing on, is the one called Broadcom. Broadcom is becoming quite famous and popular for the chips they provide. But not only is Broadcom a name that produces chips for the AI industry, custom chips, but they're also in the software business as well. Their recent purchase of VMware allows Broadcom to diversify their business a lot more. And they also provide chips for automobiles, the automobile industry, and still they are involved in the cell phone industry as well. So Broadcom, a little bit more diversified than some of the other chip makers like Marvell, and you can see how well Broadcom has done. As I mentioned on many shows ago, we used to have the MAG7 as an acronym, and we changed that to Batman, and the B in Batman was Broadcom. And why do we focus so much on Broadcom? Well, if you look at the largest companies in the world that we have, the next chart, you can see right now, Broadcom is the 8th largest company in the world today. There you have Nvidia. Keep in mind, these numbers are in Canadian dollars. So Nvidia, 5.7 trillion, Microsoft, just over 5 trillion, Apple, 4.7. But look at Broadcom, just under $2 trillion. Saudi Aramco is number 7, which is obviously state oil company in Saudi Arabia. And I guess very right after Broadcom, right on their heels, is Taiwan Semiconductor, obviously produces chips globally, and Berkshire Hathaway, which is the Warren Buffett company that we've all grown to love. So Broadcom, Salesforce tonight, I think a big name, big tech reporting tonight, important for the Dow. And tomorrow, after the bell, Broadcom will be reporting. If you are an investor and if you have shares, very important for you. The third point I wanted to stress for individual investors before you make your investment decisions is the idea of international trade headlines and the focus that has been on international trade and tariffs, and it just continues, right? The relationship between the United States and China, relationship between the United States and India, relationship between the United States and Russia, the pressure that the U.S. has been trying to place on Russia to end the war with Ukraine, increasing tariffs on countries like India from 25% to 50% because they buy Russian oil. Recently, over in Beijing, in China, they had a conference there, and who was there? Well, Vladimir Putin, head of Russia, Narendra Modi, head of India, and the head of North Korea, Kim Jong-un. They were all there talking to Xi Jinping of China, and I guess That is a lot of those countries, we call them the BRIC countries. Who was missing? Brazil. And what did the United States do recently? They put 50% tariff on Brazil. So there's been a lot of concern that perhaps the United States is not making many friends in many of these parts of the world, and that we're starting to see a lot of these Asian countries, as well as perhaps countries like Brazil, start to form alliances that are not involving the United States. And I think that is, and that can have effects on the stock market and on the bond market. A lot of concern right now, a lot of concern with the Federal Reserve and some of the headlines out of the Fed and Fed firings and will they fire and may not fire and all of that. So a lot of uncertainty in the world today, and it's having some definite repercussions. Our first chart for this segment is one that shows all the different tariffs on many of the different countries. You can see a lot of them there. I'll read out some to you. Obviously, Canada, we've gone from 25% tariffs to 35 on a small portion of the goods that we send to the United States that is not CUSMA or USMCA compliant. Brazil, now a 50% tariff. Just this morning, I was watching some TV, and they were talking about how coffee has gone up. The price of coffee has gone up because of the tariffs in Brazil. India now, a 50% tariff. And the list goes on. And you can see here, South Africa, 30%, Taiwan, 20%. That's come down from 32%. But overall, the tariff rate in the United States has gone from about 2.5% about a year and a half ago to somewhere around 15 to 18% as an average on all goods coming into the United States. Our next chart is specific for India. And you can see here the U.S.-Indian trade imbalance, how much it's grown from the first Trump term to current. And that is why President Trump has put tariffs on India. India, according to the United States and according to many, has been one of the countries around the world that has had the largest trade barriers. Barriers to enter into the Indian markets have been massive. And whether it's because they still are an emerging market, they want to protect industry, whatever the case is, India has had some of the largest trade barriers, tariffs, and other things put on goods coming into their country. But, they're going to tell you they can probably get away with it. A lot of people would love to get, a lot of businesses would love to get into the Indian market. Remember, India is now the largest population in the world today, just surpassing China very recently. Next chart shows the 10-year and the 2-year bond spread. As you start to see these, these lines moving higher, US, UK, Japan, Canada, Germany, as you see that spread between the 10-year government bond rate and the 2-year, that shows you a yield is steepening. And what affects the 10-year? What affects the 30-year bond rate, which we're going to see we can put up right now? And that is uncertainty in the world. And you can see how the 30-year Treasury just crossed 5% today, this morning, before it pulled back to about 490, 495. But that is actually something that is not controlled by the Fed. And when you start to see the higher end, or I guess the longer term yields on U.S. Treasuries move higher, that shows us that there is a definite uncertainty that exists right now. And that uncertainty is definitely not good for markets. So if you're an investor today, as always, you want to keep an eye on many different things. You want to look at some of the corporate earnings that will be coming out tonight and tomorrow. You want to definitely watch and listen for jobs numbers on Friday. And also keep in mind, a lot of the headlines are going to still be coming out with respect to trade, with respect to bond yields. And these are the things that, if you are an investor, you want to be mindful of before you make your most recent investment decisions.